everybody. This is the webinar from Volt and Veyt under the headline Gloomy Outlook for the Nordic and German Energy Transition in the Face of Market Challenges. So, I am Knut Frosted. I'm Head of Renewable Energy Analysis at Veyt, and I will be your host today. Veyt is a world-leading provider of data-driven insights into low-carbon markets. We cover the renewable power, renewable fuels, and carbon markets with unparalleled breadth and depth, backed by expert, independent, objective research analysis. Our team of analysts cover market developments on every continent, strengthening our clients' decision through real-time analytics and market intelligence. We deliver the insights you need to spot risks and opportunities and achieve your goals. If you want to know more about how Veyt can support you, feel free to let us know in the comments, or you can visit us at veyt.com. But now over to today's theme, gloomy outlook for the Nordics and the German energy transition in the face of market challenges. So in my work, I have modeled many scenarios of the future of energy in Europe. Some of them we call base case. Some of them are more like thought experiments or what does it take scenarios. Today, we will investigate one scenario in depth, which could be closer to a base case than many politicians would like to admit. What if we don't reach the 2030 targets in Europe? What you will see is how this scenario unfolds first on the physical power market side, and then on the markets for guarantees of origin side. To help me with this, we have two brilliant experts. Olav Botnen is a well-known analyst in the Nordic electricity market with more than 36 years of experience, first from Sintef Energy Research, then from Markedskraft, Wattsites, and Volue Insights, and now representing Volt Power Analytics. And over all these years, his focus has always been on forecasting electricity prices. Then Daniel Arnesen is the manager for renewable power certificate analysis at Veyt. He has over a decade experience working with renewable energy law and markets across the world in different settings, ranging from PhD research in Europe and brokering transactions in South Africa to managing the renewable power certificates. But before I hand it over to the experts, just a few bits of information. We will have a Q&A session at the end of the hour. Please use the Q&A functionality at the bottom of your screen and do not use the chat function. We will pick up the questions from the Q&A function. And it is best if you do not leave anonymous questions, because we are not sure we will be able to answer all questions, and then we would like to send you a response by email later. We will send out the recording of this webinar to you all as soon as we can. But for now, over to the experts. First, I invite Olav Botnen to take the stand and start his presentation. Please, Olav.
Thank you very much, Knut. I'll first share my screen with you. Are we able to see my screen now?
Yes, we are.
Yes, excellent. Yes, I'll start out with some words about the gloomy outlook for the Nordic and German energy transition in the face of all the new market challenges occurring over the latest couple of years in both in Nordic and German markets. First of all, I will introduce my company, which I'm now working for. It's called Volt Power Analytics. We have 1 year of experience now together in this group of 5 analysts. We are producing power price forecasting in a standardized way already, with price forecasting for the forward horizon and soon also giving a long-term outlook to the markets. And we also do tailored consultancy for power utilities and traders in this market. So I will go through the new landscape for renewable investments and some words about the LCOEs versus the long-term price indications. And I will go also through the electrolyzers and the perspectives for them, and new trajectories for development of supply and demand balances in the Nordic and German markets. And finally, some words about simulation for decision making in this new environment. So the new landscape for renewables has been quite much more challenging than previously due to the strong inflation rate, due to the increased interest rates, and the bottlenecks in the supply chains, and with the effect of 30 to 40% of increase of investment costs for a lot of renewable projects over the latest couple of years. And additional problems has occurred for onshore wind due to licensing processes being slower and more difficult than previously. And in Norway, we also see challenges from increased tax levels. Offshore wind has been into a very lot of new occurring problems with auction processes failing, some investment decisions being delayed or cancelled or on hold, and stronger need for subsidies has occurred on the way. Solar is a bit lit up and down. For now, it's quite a healthy development, with falling battery costs may boost this source in a couple of years. And we also find this German 2030 target too ambitious, and so we have reduced our ambitions in our forecasts. We also see problems with grid projects with slow licensing, slow progress, and which is hindering some large-scale renewable investments and also new industrial projects, and also the risk for splitting into price zones. And for electrolyzers, we see strong need for subsidies, quite slow progress nowadays, and it's difficult to find long-term offtake agreements for fulfilling those investments with investment potential from the bank. So the new LCOE levels for the Nordic area is like this, quite low cost for hydropower and onshore wind, but only a minor development is potentially available for hydro. However, for wind, it's quite strong in a lot of countries except for Norway. Solar ground and solar flat roof is nearly profitable, but probably on the margin for a lot of countries. When it comes to nukes and offshore wind and solar rooftop and floating wind and gas-fired, support is needed in some way to fulfill investments. And if you look into the German LCOE indications, they're much higher. For onshore wind, it's like 70 euros. For Nordic, it's like 40 euros. Solar rooftop is nearly 90 euros. So that's more or less in line with what we expect for a Nordic. But if you look into the price expectations, we see that it's quite difficult for a lot of those technologies to find its way to the market on normal market conditions, due to the fact that capture prices will be normally approximately 7 to 20 euros lower than our baseload price expectations for wind and solar projects. So that means it's quite difficult to find the way into investment, both in the German and in the Nordic markets, on market conditions on its own, except for the two technologies I mentioned, hydropower and onshore wind, when it comes to the only to the economical part of it. For offshore wind, we have seen a lot of failed auctions and failed investment decisions due to the fact that the costs have been lifted so much, as we have observed lately. So that means a lot of projects has been on hold or even cancelled during the latest year or so, due to the increase in costs, but also due to increased inflation rate and so on. And this have also consequences for our outlook, with some projects probably to fail when we come closer to 2030, as more subsidies is needed. And in Norwegian projects, we see additional problems with deep sea and high grid cost connections, for connections, and also even higher need for subsidies in Norwegian offshore areas. So that means it could be some significantly delayed or cancelled projects here. And we see also somewhat slower development for offshore wind in our European perspectives due to those components. So supply will probably fail a little bit over the late 2020s and early 2030s due to the new cost level compared to the previous targets at least. However, high speed is expected later on if we assume falling LCOEs later on. For Norwegian projects, we see a lot of headwind nowadays, both for hydropower and onshore offshore wind and electrolyzers, with a few licenses available for new hydropower and onshore wind, except for very small scale hydropower plants. And we see a new Norwegian tax regime, which might cap income so much that some wind farms will fail in investment. So one of the players in Nordic told Montel some months ago that the new taxation of onshore wind will scare away investors to other countries. However, there are many small-scale hydropower projects in the pipeline, but nearly no other projects under construction in Norway. And we expect offshore wind to be delayed to post-2030 in Norway. So the Norwegian power balance is quite changing on the way to 2030 due to very weak supply increases and very high consumption increases. That means that the existing oversupply will disappear on the way to 2030 from approximately 17 terawatt hours of oversupply in the south nowadays down to nearly nothing by 2030. And in the northernmost part of Norway from 8 terawatt hours approximately to minus 6 terawatt hours by 2030. So that means Norway will move to a minor undersupply by 2030 in our perspectives due to this development. And for Sweden, we see still a quite strong onshore wind development. However, licensing process have been slowed a little bit compared to previously. 4 years of licensing process nowadays, but probably the speed will be somewhat higher in the late 2020s. And we also see that oversupply in the northernmost zone has temporarily halted some projects there. But however, we still see a rather healthy development in the northernmost part of Sweden, a little bit less speed in the south of Sweden. So for Sweden, we see a quite strong onshore development both in north and south, especially in north. And we see quite a lot of offshore wind coming in post 2030 there. And we also see quite a lot of solar coming in the south. And even nukes will find its way to the market by 2035 approximately. So we see quite a neutral balance occurring in south of Sweden after a while. It's a tradition of very undersupplied zone, but it will disappear when offshore takes a toll on the market. And if you look to the power balance in north of Sweden, it will move from a very strong oversupply to a more moderate oversupply, which will more or less give the price deviations between north and south to disappear by 2027 approximately, due to this reduction of oversupply. And also stronger connections between north and south will remove the price difference between north and south by approximately 2027 or 28. So in both south and north of Sweden, we see a quite strong development of green steel and electrolyzers popping up in the late 2020s and also in the 2030s, and also some battery production and another quite a lot of different industrial perspectives coming up there. which will take a lot of new consumption in that area. If you move to Finland first, we also see a quite strong development of onshore wind there, and also some solar coming up, and consumption is even on the strong path there. So power balance will be as a minor undersupply all the way. However, it's still coming more and more into a neutral perspective also there. So this is a quite healthy development also in Finland for the green transition, and in line with Sweden. And if we move to Denmark, we see a very strong development on wind, both offshore and onshore in both price zones there, and even some solar growth is expected in both north and south, east and west of Denmark. And a very strong consumption development in both zones there, approximately doubling in both of the zones when it comes to consumption. And it's quite balanced on the way between the supply and demand all the way. So Denmark has a quite nice performance. However, it's somewhat weaker than the targets. And finally, going to Germany, there we see a very strong development all over for onshore and offshore wind and solar development and even consumption. But however, the targets are even stronger, much stronger in fact. And as an illustration, the solar growth in the targets is nearly 4 doubling of the installations for solar generation. We have taken only a little bit more than doubling into our perspective. And when it comes to onshore wind, the expectation is like doubling there, but we have not taken all of this into account. And for offshore wind, they have nearly 4 doubling in their perspectives for 2030. We have only taken a little bit more than 2 doubling on the way. So it's somewhat weaker all over for onshore wind, offshore wind, and solar compared to the targets. However, if you look into the other countries of Europe, it's still quite a healthy development. And consumption is also coming up quite strongly in Germany. So the power balance is nearly unchanged on the way to 2030. So moving over to the electrolyzers, we see a very weak development for electrolyzers all over in Europe and also in the rest of the world nowadays, because it's difficult with the technology development. It's a little bit slow compared to the extreme targets available. The EU target of 40 gigawatt is way out of, in our forecast at least, by 2030. So we expect approximately somewhat like half of it to find its way to the market by 2030. The challenge is to find long-term offtake agreements to secure the cash flow for the banks to finance the projects. That's one thing. And the second thing is, of course, the technology development, which is lagging a little bit behind the targets and the need for fulfilling the targets. And the EU's hydrogen bank is quite a small-scale candidate to accelerate this development. However, in Sweden and Finland, we see quite a healthy development for electrolyzers, or at least that's what we foresee by the late 2020s. So here is our detailed perspective for the electrolyzers, both in capacity down and on the upper table move into terawatt terms. So we see that by 2030, our expectation is like 33 gigawatts compared to the target of 40. So that's approximately half of the target being fulfilled by 2030. And we see Nordic being half of the capacity in their installations compared to the rest of Europe, a little bit weaker than that. However, we expect much stronger development in the 2030s. So by 2036, approximately, we will probably reach a target for 40 gigawatt, 6 years delayed approximately. So that is our perspective, and I think this is also a quite optimistic scenario compared to the very slow growth rate nowadays. So in this environment of challenges of economical, let's say, economical development and the difficulties with fulfilling the financing processes, I think this kind of model we have developed in Veyt will help a lot of the participants in their investment plans, because in our model we have hourly resolution for all of the countries involved in the green in this chart here, with detailed modeling of all hydropower plants in Norway and Sweden and 30 weather years available, and all the thermal plants throughout Europe is included, and forecasts for everything of generation sources and power consumption in all of the price zones, and hourly time series for both onshore, offshore wind and solar generation and power consumption. And in this way, we can simulate both for the forward horizon and the long-term horizon, the price development in an hourly resolution. And in this way, we are able to calculate capture prices for renewable investments all over, and also how to utilize the electrolyzers in this environment going forward. So in this way, we will at least help the clients to find a way in this new and challenging market with a lot of volatility going forward. So now I've finally reached my end of presentation. Thank you for joining. And now I can leave the words over to Daniel, which will continue.
You love, and thank you for setting the scene there. I will just start sharing my screen.
I think I have to stop sharing my screen first.
Yes.
So there we are.
Olav just set the scene for how the power market is developing in this kind of harsh environment that we see, and now we'll proceed and see how the impact can be on the guarantees of origin market. Since the guarantee of origin market is rather different from the power market, we will look into kind of some of the characteristics there. This presentation will focus then on the long-term market drivers that we see, that following regulatory developments, partly in terms of corporate demand, but also how the outlook that Olav presented affect the geo market in terms of renewable hydrogen production and the capacity build out, before we move over to the outlook for 2035. So first of all, the power market and the geo market, they are distinct but connected. So power you need to consume immediately, whilst the guarantees of origin market or guarantees of origin generally have a lifespan of 12 months. But it is different from country to country, as they have their margin of appreciation when it comes to the implementation of the directive. But the importance is that the regulatory context of the guarantees of origin market is providing a incentive and enabling green premiums for renewable electricity supply. And this is due to the geos providing or enabling differentiation of power production. And on the rest of the supply chains, in the suppliers and the end users, it sets rules for how to disclose how to use geos when disclosing energy mix and environmental impact of the supplied electricity or the consumed electricity. And this is regulated, this is increasingly regulated in the EU. And most of you probably have seen in the last few years that prices of the geo market has been highly volatile. We have seen prices in the start of 2021 being under €1 per megawatt hour, reaching a peak in the late 2022 around 10 euros per megawatt hour before it dropped down and was moving between around 6 to 8 euros per megawatt hour before it came down significantly towards the half of 2023. And a lot of this is explained by weather conditions. As you probably are aware of, like the supply of geos are highly dependent on the supply of renewable electricity, which is highly intermittent. And 2022 was a very dry year, and the weather conditions was not that favorable for the production of renewable electricity, hence prices peaking, whilst 2023 has been just the opposite. And we see prices have gone down for 2023 vintage to 50 cents per megawatt hour, while the current year vintage is trading around a little bit above 1.5 or around 1.5 euros per megawatt hour, and future vintages are higher. But so these are affecting the market, but we also see an increasing impact of long-term market drivers created by the regulatory context, and that include targets like capacity of production targets for renewable electricity, and which has a bearish impact. But we also have demand regulations such as the regulations for the production of renewable hydrogen and meeting those targets, which creates a bullish impact, and another regulation. I'll get back to some of those. And for this presentation, we will focus on RFNBO, or hydrogen, and corporate sustainability reporting requirements that incentivize corporates to procure renewables. So this matrix here might be a bit, you might get lost in it, but the important thing that comes from this is essentially what you see in the center, which came last year, and that's the European Sustainability Reporting Standard, which sets up a standard for how corporates are supposed to report on their electricity consumption, both in terms of the energy mix, where it obliges the companies to use a market-based approach, and hence using guarantees of origin is favorable. If you're not using guarantees of origin, you are left with what's not used actively in the residual mix, they call it. And for greenhouse gas, they oblige companies to use both a location-based and market-based approach, which also incentivize the use of guarantees of origin for those companies who strictly have been reported on local-based approach before. And this affects up to 50 or around 50,000 companies in Europe. And it is having an impact from this year. So we will yet see how companies would align with this, and how also member state would incentivize companies to align with these reporting standards. Then we also have, as I mentioned, the new targets for renewable fuels of non-biological origin, also known as RFNBOs. And with the Renewable Energy Directive, the European Union have set new targets there for both industry and transport to incentivize the use of renewable hydrogen and its derivatives in these sectors. And we have, so the importance of this is essentially how it is connecting to the guarantees of origin. Traditionally, geos have nothing to say when it comes to target fulfillment in the EU, but with the introduction of these targets, it has an indirect impact, because the European Commission have made it clear that guarantees of origins are necessary to be used when sourcing the electricity for the production of any hydrogen that would qualify as RFNBO. And there are specific rules for how renewable hydrogen can qualify for RFNBO. That is that, for instance, when you have a bidding zone with 90% renewable energy production, then you don't need to comply with additional criteria, but you need when you're sourcing the electricity or buy the electricity, you need to combine it with unbundled geos. Then you have other cases where you need the geos to be bundled to PPAs, and also they have additional requirement for certain pathways, such as the requirement for monthly matching before 2030 for low carbon grid intensity bidding zones, and hourly from 2030. And this will create a new kind of demand for geos, which we will see in the outlook that we have. So, if moving forward to the outlook based on what Olav have been presenting, we at Veyt has developed a long-term forecast model where we, based on different scenarios, forecast fundamentals up until 2040. Here we only share up until 2035, and we see how price development are developing there. And as you see here to the left graph, we have, when it comes to renewable hydrogen, that is adding an additional demand to what we could call a business as usual demand in Europe. So and it will gradually increase. And then you have the additional, we have a corporate, like higher corporate demand, which we do expect to see, but we will see the full extent of as we are seeing the impact of, now when the European sustainability reporting standard has come in place, but we also see new regulations on the horizon that is strengthening the position of geos and also incentivizes their use. So here you see how the demand without these demand incentives, you can see that the demand or the supply and demand gap will just increase as we are, regardless if this is a glooming outlook, we are increasing, and we are increasing quite rapidly the renewable power capacity build out. Yeah. So, and with that said, you see how the prices develops going forward. And in this, also an important aspect to this is that we are in an economic situation where the willingness to pay or the it's a harsh economic situation. So we have seen prices going down, not just because of the supply and demand balance, but we foresee, like in this price curve, we foresee that the willingness to pay will normalize again. And then we see have a lower case here, where we move from around a annual weighted volume weighted average price of around €2 to 3.6 around for the lower case, and then the higher case we see it almost reaching up to €5 per megawatt hour by 2035 in the scenarios that we are providing here. But with that, it's also important to acknowledge that certain geos from certain areas have premiums, such as German geos. They are generally traded with a premium that's ranging between 5 cents to €2 per megawatt hour. So, and that is due to national incentives that have kind of a local preference, among other things. So the situation can be different depending on what jurisdiction or which local market you are referring to, even though this is a regional market. So to conclude this, one of the things here that you see when we are moving from now to 2035, an important aspect is how the sequencing when we're moving towards and possibly reaching the renewable electricity production and hydrogen production targets. That's extremely important to understand how these are moving together, along with how corporates align with low and net zero emission targets. This will determine the movement of the market going forward. And in the present scenario, we see that where both the renewable electricity production and the hydrogen production are falling short, and each having a bullish and bearish impact respectively, the overall impact is, however, bullish until 2035. And that sentiment can be further increased if the corporate demand is increasing. And I have shared this table here just for you to get an overview of that. And with that, I say thank you, and we move over to the Q&A.
Thank you, Daniel, and thank you, Olav, and thank you all those listening and watching us for your patience in some technical hiccups we've had. Anyway, I would like to then take this time to reflect a little bit on what we've seen. So Olav and Daniel, you've shown us how political goals and targets have translated into, or will translate into, outcomes in the market through heavy trends observed, but not least restrictions that are expected from corporate sector, from the energy sector, from bureaucracy, and from society at large. It may well be that the restrictions that we see will curb the uptake of renewables towards the targets, and the targets will be missed. However, we also see evidence from the markets that they will react, both the physical power markets and not least the guarantees of origin markets, to provide more incentives for more renewables, more hydrogen, more green shift. So some kind of a paradox, you could say that missing the 2030 targets is maybe what can give a boost for the green markets and thereby assuring a somewhat delayed but longer term target reaching for Europe. I will then turn over to the Q&A section, and we've received a few questions. So I will turn then first to Olav and ask a question. What is the key accelerating the development of renewables to meet the targets?
Yes, and I will say that the most powerful way to accelerate the development is that external factors like reduced interest rates and falling technology cost might be the strongest driver going forward. And that is also expected for offshore wind, at least going forward, and also for solar and batteries and so on, and even electrolyzers. So that is the strongest key for how to accelerate the development. At national level, I think we can also say that boosting renewable development is possible by quicker licensing processes and quicker grid extensions and stronger subsidy schemes if you have to plug the gap in somehow to the market, and also competitive taxation regimes, which is extremely important, at least in Norway. So I think in those ways it's possible to accelerate the development. And of course, the main driver, every driver, is of course the price development for power and even the green or geos and other mechanisms.
Yes, thank you. Then we have a question for Daniel. Hello, if I understand, there is a correlation between the renewables production and the geos in this way. If we see a drought in Europe in general now, I understand that the price will increase. Is this correct?
Yes, that's correct. And that's what we saw in 2022. And actually, we saw just the opposite in 2023, where prices dropping, they coincided in 2023 when the rain started falling in a lot around Europe, and in particular in the Nordics. But what kind of weather conditions that play a role will depend on how the power mix looks. And as we are adding more wind and solar, the role of hydro will lessen in the geo market. But as of now, it has a quite significant role.
Exactly. Then another one for you, Daniel. What kind of parameter do you use to make or to forecast of the guarantees of origin?
That's a lot of different things, but we're looking at the fundamentals, supply and demand. But we also have, like, it's a very specific market, but we have different willingness to pay for all sectors. So I don't know, I can't remember how many sectors, but it is around 80, I think, where they have different willingness to pay, and that is based on literature review, but also on economic indicators. The problem with the economic indicators is that there's often a delay in what we get from Eurostat and so forth. So we also have real-time prices feeding in, and we do assessment. So now when we are in a quite harsh economic environment, we have done some adjustment to take in consideration the high interest rates and so forth. But there's a lot more to it. but I can't go into all those details. So I welcome people to reach out after.
Yeah, and subscribe to our platform, and you'll get
Of course.
everything. Okay, then a question to Olaf. Why, in your words, do you think the development of hydrogen electrolysis is lagging so much behind the targets towards 2030?
Yeah, first of all, I will tell that the upscaling of this technology is lagging behind its plans. Those hydrogen electrolysis development we have observed so far is only 0 to 10 megawatt or something like that. And I think the biggest in the world is like 20 megawatt. And for large scale industries, we need like 600 or even 1,000 megawatt for the green steel industry. So we are not on track with the technology and its development. That's one thing. The second thing is the increased costs for this technology, which is nearly stopping a lot of the project development. And finally, the problem with finding long-term contracts, both for offtake of hydrogen and also for the PPA contract for the power needed for this industry. So I think all of those aspects are difficult, and it ends up with difficulties in financing the projects. So that's the problem for now, and that's why EU have a special bank for hydrogen under construction, so to say. But it's starting at very low volumes, and that's a problem.
Yes, and as you say, and as for many targets in Europe, I guess it's not a question of the targets not being met, but that they will be met with a delay.
Yes, so my best guess is like 6 years delay on the path, so to say.
Yes. Okay. And now then a question for Daniel. Long-term price forecast of only 2 to 5 euros per megawatt hour. Why shouldn't it go up to 10 or much more like it has in the past?
Can you repeat that question? I didn't really.
Yeah. So why do we not expect prices to go even higher? Because we've seen values of 10 in the past, 10 euros per megawatt hour, and we only forecast 4 or 5 euros towards 2035.
Yeah, so this is scenario based, right? So this like it does matter how the sequencing of the different targets are met, as I said. So it can change, but it is based on these parameters that we have been working with Veyt, and also like it will depend on how how the economy is developing forward. I would expect one of the things that we saw is that the 10 megawatt hour, of course, it went up there and it went down quickly. One thing that we saw in 2023 is that the renewable capacity build out was quite big, along with good weather years. So when this is increasing, we will need to see an increase in corporate demand in order to cover this. So I would like to see, we will need to see greater corporate demand and greater impact from this, from hydrogen demand or production demand for this. But we are also in-house, we are also working on other scenarios. So that's another reason to subscribe for our platform.
Yes, and I guess also it's not that we can't see higher prices, but that we are forecasting a trend, and there will be volatility around the trend.
Of course, there is volatility. And also one of the things is that if we are, as of with the Hydrogen Delegated Act there, if we are to move to higher granularity and we do that across the market, so that we are monthly and then hourly from 2030 and onwards, then you will see prices fluctuating a lot like the power market. So there will be movements in that case. And as I said also, like you have locations or origins of geos where they are premiums. So
okay, we're getting close to the top of the hour. We have more questions, so I'll just continue on. Another one for Daniel. Can you comment on the UK REGO market? Because it seems to continue on a completely different price level compared to the rest of Europe.
Yeah, so I'm not the expert there. We have an analyst specifically focusing on that I recommend you to reach out to Kumar. But we are looking into it. And what we see actually is, like in contrast to the contango movement of the geo market, you have a backwardation market there in the UK, where, to my knowledge, actually there's no fundamental explanation why forward prices are trading so much lower. But one reason why the current year or compliance period, as they call it there, has increased is that they squeezed the supply from the rest of Europe. So there you have a local market which is way more restricted than the continental Europe.
Exactly. Yeah, there are more questions for Daniel here. Next one. Does the price of geos shown take into account a potential shift towards monthly matching of consumption and geos? If not, do you think the impact would be significant? I think you touched upon that.
Yeah, I touched upon it, but the model as it is there, it does not do it.
No.
But that's to give a treat for the future. It's coming. Like we are moving with our modeling and so forth. We are moving with policy and market developments.
Yeah. Okay, I'll take one last question here from Stupid in Grit Energy in Bangladesh. So very nice to see you reaching out from so far. And it's to Daniel. Is there any scope to buy geos from Asia Pacific if a German buyer is based in Europe and want to reduce their scope 2 emissions from Asian factories? By buyer, I mean H&M or other European brands, for example.
Yes, of course, for their operation in non-European jurisdictions and markets, they will need to source contractual instruments or energy attribute certificates from that area if they are available. So they could do that, of course. I know that there's corporates are still maturing in how to report and so forth. I have seen that some corporates are reporting as if they are consuming it on behalf of Sweden. Let's say they're based in Sweden, but they're not supposed to. They're supposed to report it as if they are based in Bangladesh or whatever country it is.
Okay, I think we're at the top of the hour, and I would really like to thank you, Olav Botnen from Volt, Daniel Arneson from Veyt, for these really deep thoughts and good modeling exercises. For everyone, please reach out to either expert or either company for any further questions. I think there was one or two questions that we didn't manage to tackle. We'll send out emails responding to that. Thank you all, and I wish you a very nice afternoon.
Thank you.
Bye.
Thank you.